You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time once again for the final program here on our broadcast and recording week on the old Options Insider Radio Network. It's time for TWIFO, This Week in Futures Options. As the name implies, this is a show where we break down all the hot action on the other side of the fence, the futures options. So maybe your E-minis, or your crude, or your gold, or your fluid milk, whatever is lighting it up this week. We'll talk hot strikes, talk volatility, skew, all that action, all that fun stuff. And of course, if you like TWIFO, 14 other programs for you guys to sink your meaty teeth into. Easiest place to find that. So wherever you listen to this, could be iTunes, could be Google Play, wherever you find this fine program. Just search for the Options Insider Radio Network. Subscribe to that. You get the full kit and caboodle, all of our shows, daily news show, advisors option, tech show, volatility show, all that fun stuff. Delivered straight to your platform of choice. Easy for you, and that includes TWIFO, so you don't miss a beat out there. And of course, you can always find it over there at the mothership as well, theoptionsinsider.com, or you can grab our mobile app, available for all the major platforms, iOS, Android, and the ever-popular Fire OS. And of course, the hardcore view, we give you a little bonus. You guys can join us live every Friday 1:30 p.m. Central, 2:30 p.m. Eastern via Mixlr, MIXLR. If you've seen the link before, follow us on social media. You'll get it there. Grab it once, set it and forget it. You're good to go every Friday when TWIFO goes live. And of course, you can always follow along with the show as well, not just the audio version, but also with the reports that Nick and I look at here live on the program over there at CMEgroup.com/TWIFO, TWIFO. Then you too can generate the exact same reports we're looking at completely for free. And if you join live, then during the show, then of course you get a little extra bonus. You can click a little bit deeper in some of these links and see a little bit more info on exactly what was going up out there. Check it out. It's certainly worth doing. No matter when you listen to the show, it's certainly worth checking out that link because these reports are pretty handy stuff and you can't beat the price. Completely free. And joining me on the old program today, the creator of said reports and the founder of Bantix Technologies, Mr. Nick Howard. Nick, welcome back to TWIFO, sir. How's your week going?
Hey, man, good. Friday already. Surprising it's here so quickly, but it was a good week. I paid attention a lot this week because I was interested after last Friday and the index is finally breaking. So it was a fun week to watch the market.
Let's do it. Let's get into the indices then, because there was a lot of action out there, as you imply. You know, it kind of started off late last week with yet another tweet storm from the Oval Office about fire and fury and all that fun stuff, sending the market into a bit of a tizzy earlier in the week. This week, things seemed to quiet down a little bit. Then, of course, as the week progressed, we had more info. Tweet storms, call them what you will, coming out of the Oval Office, sending the market into another bit of a tailspin. Today, we seem to have recovered a bit. It seems like unlike last week, where we kind of continued to sell off later into the week. Today seems like most of the major indices are pretty much rallying on the day. That kind of wipes out some of the losses out there for the week. And net on the week, I'm looking at the E-minis right now. You guys can do the same over there. CMEgroup.com/TWIFO. E-minis down about 10 handles on the week, net on the week. So interesting stuff out there across the board. Let's dive into it then. Let's start in the index space because I know a lot of you guys are really paying attention out there to what's going on in the E-minis and Russell and a few others. And of course, as you mentioned, Nick, it's been a kind of wild week. We saw vol really spiking up towards the end of last week and then again earlier this week. And now, as we said, at least near term, the sell-offs have ameliorated a little bit, so some of the vol starting to come back in. That's the case when you don't have the continued sell-off, then the vol comes in. That's what we're seeing right now, pretty much across the board out here in all the months. Obviously, a little bit nearer term contracts taking a little bit harder hit. The rest of them kind of slightly off on the week, but still an interesting week it has been out here in the E-minis. And you're asking us right now, hey, what was the hot option, the hot strike number one with a bullet out here this week in E-mini S&P 500 land? There's a lot to choose from, listeners, because things were active pretty much across the board. You guys, if you trade E-minis, that the weeklies are where a ton of the action is. And yet this week, it was actually straight up monthlies that had the number one with the bullet trade in terms of the SEP 2300 puts. Lighting it up out here, taking the number one spot, just barely. It was a pretty tight race this week. 48,673 of those bad boys going up this week. A lot of back and forth, as you can see, because this strike pretty much only had about net closing, actually, of 3,000 contracts on the week. So a lot of back and forth. The lion's share of those contracts going up on Wednesday were almost 15,000 went up. And then today, about 13,000. So those 2 days accounting for about 28 of that 48,000 contracts. Worth noting, too, as well, this week was a strong week. Just net for volume, open interest up about 21%, pretty much in the E-mini options out there. So that's a pretty active week. E-mini also always pretty active, but now to have those kind of numbers going up. It's interesting, Nick, because this is usually the time of year where things are pretty quiet. August, down, the dog days of summer, most of Europe on vacation, a lot of U.S. on vacation. It's not exactly a time to be known for a lot of tumultuous activity, a lot of action, a lot of volume, a lot of volatility. Yet that's exactly what we're getting here so far this week. If you want to go where number two was, you actually got to go a little bit closer to home. In fact, to the weekly that is now a daily, because it's pretty much coming off today. And it was the 2420 puts. An interesting strike there as well. So we have the 2,300 puts in the front month, lighting it up for 48,000. Hot on its heels, though, were the 2420 puts out there in this weekly expiring today, going out 46,000 and change of those. Also a lot of back and forth on that strike because those net pretty much unched from an OI perspective on the week. And the lion's share of those bad boys coming today, 26,000 and change coming in. Maybe someone coming in to close out a position given the fact that the OI hasn't moved too much on the day. But still, interesting stuff out here, and again shows that maybe someone was expecting the sell-off to continue when it didn't happen, piling into those puts, maybe taking some of those off the board here. And then number 2, we get down to, again, in the weeklies that are expiring today, very close. We had 2420 number 1, or number 2, I should say. Number 3 are the 2400 puts, also about 38,000 going up out there. So these are just big numbers. It's pretty much puts all across the board, as you might expect this week here. You got the 24 quarter puts, 32,477, 32,000 of the 2410. In fact, that entire strip, 2400 to about 2425 on the put side in this front week contract, was very, very active this week. All of them lighting it up here pretty much across the board. And then you get into some other numbers. Also, the 23 half puts in the monthly, the regular SEP contract, also very active, 38,000 and change of those. So pretty much it was a, shall we say, a put heavy week out here, Mr. Nick, in the E-mini S&Ps. I know you've been watching the skew out here quite a bit. It has been an interesting tale to watch as, you know, the skew gets bid up and then the underlying sells off and what happens to the skew. So Mr. Nick, what's been catching your eye out here in the E-minis from a vol perspective and from a quick skew perspective, sir?
Yeah, well, you just mentioned how it's a put-heavy trade, and if you're out there on the report, you can see that the put-call ratios are all, most of them are pretty significantly high and tilted towards the put. So 2.25, 4, almost 6, 3.5. So a lot of put trading. So that's kind of the expectation, especially when you start to see, I think you see that in whether we're a rallying market or a breaking market, that tends to be the case there. And we learned some things last week just about why we might see some of that skew in the curve, just based on these programs, trading puts, or guys coming in, or houses coming in to buy puts on a regular basis, and then other people selling them at a particular price and people scooping them up at those low prices. And something to keep in mind, you know, way out there on the strike range, when you start selling, you know, people are not thinking about volatility when they're talking about nickels and dimes, but those nickels and dimes can, you know, imply a very high volatility. So that will give some reasoning behind why we see that big tilt and why we see that big put skew. But yeah, lots of puts going up. You know, we are really, you know, I'm not a technical analyst by any stretch, but, you know, I used to trade some stock in the day, my early trading days, and used to do some charting. But I think we bounced off some support lines today around that 2420 mark, if I'm not mistaken, or we didn't breach them quite as much. But it really is that 2420 and the 2400. I mean, we have some handles to go if we can get some follow through on this break. So it'll be interesting to watch again next week as some of the fallout from the White House, Bannon leaving, seeing if he bashes the presidency at all over the weekend via Breitbart. So we'll have to keep an eye on that. But I was hoping that we'd get some more follow through. We needed about another 0.5% when we were down around the 2420 range in order for people to be interested and see some volatility popping. And again, just like we talk about all the time, you don't get any follow through. We got a good break. But we didn't get a good break yesterday, but we didn't get any follow through. Therefore, the volatility is not going to stick around. In fact, if you look at the short dated stuff, that vol's in and it's decaying. So when you see vol in on a short dated option, and the fact that there's decay there as well, usually the vol will pick up some of that decay to keep the price close or similar. Given that sometimes people are just trading a price when it's that short dated, you really see some inroads on the volatility there just over the last 24 hours. So, you know, what are we seeing? Vols in, we see that. We have a lot of short-dated options in the E-minis. You know, when I do look at the indexes when we're doing the show, I only put on all the expirations that are tied to the September contract, right? The September futures contract, because that's generally where the trade is. There's not a whole lot of volume in the deferred contracts, but vol down across the board, even the deferreds. We got a little bit of, a change in the skews from a call over. They got a little bit more expensive from a call side, meaning the calls got less cheap and the puts got less expensive from a pure volatility price separation, but still big. You know, if you go plot the volatility curves in the indexes, it just looks like somebody just your teacher is grading your paper and she puts a big red line across from the top left to the bottom right. That's what your vol curves look like. And it's basically looks like that across all of the indexes. So, nothing too exciting there about the skew. But I think with that said, I think we learned some stuff last week from the brokers we had on just about the skew and just some insight into how those upside calls and downside puts trade. Just to revisit some of that stuff, we did talk about some of those upside calls that traded last week and how people came in at the end of the day and were buying some of the retracement calls. But if you bought those and they weren't part of like a 1x2 or something like that, where you were financing those with a short sell a little bit higher, those got hammered pretty good. So again, nothing too exciting from a quick skew standpoint, but it is interesting to know how that quick skew might get formed. While down, I think I personally, I have no stake in the game one way or another from a futures or options standpoint. I'm just purely from a, being able to add to your portfolio. I would love to see a continued break. I'd like to see another 30 handles. I like to see below 2,400, but I think the market would as well, because there's some room there, because that would cause some trade. You saw, just as an aside, when the market was down there, the lows, gold had not reacted very much yesterday, or the metals had not reacted very much. And then we got almost a 1% move up in the gold, and we got definitely like a 1.5% move up in the silver. So those finally reacted when we got a little bit of follow through, but those are off and almost unch on the day as well. So until we see some, consistent weakness in this market, and there's still a lot of air in it, we're not going to see much in terms of volatility or, the flight to precious metal quality or any of that kind of thing. Unless, of course, you're just buying Bitcoin like everybody is as the new flight to quality, which makes no sense. But I think that's where we are right now.
That's a dubious flight to quality there, sir. If you're
Certainly
charging
is.
into Bitcoin for quality, then I may have to take issue with your definition of quality. But people are flocking into it for who knows what sorts of reasons. All sorts of reasons: hedging, speculating, cryptocurrency, money laundering, all of the above, piling in to the quote-unquote quality that is Bitcoin. But you mentioned unched out there, Nick, and things that are unched out there. Well, what surprised me, I was looking at the chart today, actually, and I noticed, some of this, there's been a sell-off in most of the major indices, but most of them are still up fairly well for the year, with the exception of our old friend, the Russell 2000. It's pretty much unched here on the year, right about it, slightly up, which is pretty interesting. So the small caps haven't really been playing along with the rally, at least recently here, that the other large caps and other indices have really been enjoying. Most of the other major indices still up well on the year. The Nasdaq up about nearly 20%. The Dow up about 11.5%. The S&P up nearly 10%. These are not counting today's numbers, so they're a little bit maybe lower. And then other names, but then the Russell pretty much unched on the day, which is surprising. And we had our friends on from Russell over here on the show a few weeks ago. We've been paying attention to those contracts. Remember, we're not talking IWM here. We're talking the new contracts that kind of just relaunched and relisted over there on a CME Group. They're effectively the Russell Minis now. So if you like your minis, they got more mini flavors for you this time coming in Russell 2000. So things are still, obviously, Nick, still just starting up over there. They're not quite doing the same numbers as the E-minis where we're seeing, the S&P is 48,000 on the contract. In fact, we're seeing about a couple thousand total here on the week. But these numbers are starting to grow, which I think is worthy of interest. And if you were wondering, hey, what was the hot action out here in the Russell 2000? It actually was out here, not in front month or even September, it was October. The OC 1100 puts, which are, if you're following the Russell, fairly out of the money. 1360 is about where the index is right now. So 1100 puts in October, trading about a 200 lot back on Monday. That's big. That's big paper for a name that's doing a couple thousand contracts a week. That's about 10% of the volume right there in that one trade. So it's starting to trickle out. The rest of the week kind of quiet there from that strike. But still, someone, at least in the paper we're seeing, 1100 puts also fairly active out there in September as well. About 132 of those going out there. So someone out there, maybe a bit of a time spread, maybe a bit of a ratio time spread out there. Either way, the 1100 put strike, fairly active across the board here in the Russell, which is perhaps maybe a sign of things to come. Someone seeing this unched level on the side, and it's got a little bit more downside to go, which would be interesting. Vol, similar story to what we're seeing in some of the other major indices, pretty much coming off across the board. A little bit more aggressively out here in Russell land, though, just because there are fewer data points to really drive it. Fewer option trades out there are really driving a lot of the vol. Anything catching your eye out here, Mr. Nick, that's extremely different in the Russell versus what we're seeing out there in the S&P E-mini right now?
Yeah, I think the one thing to notice is that the steepness of the skew on the vol curve is just not quite as pronounced in the Russell as it is in the index. So we started to see it come into line a little bit last week, but this week it looks like the tilt is a little bit more. We see the calls didn't really change all that much, got a little less cheap, but the puts got probably more move more on the less expensive side than the calls did on the cheapness side. So we saw a little bit, basically it'd be like taking and cranking it down on the left and pushing it up slightly on the right. So we see a little less tilt there. So that's probably the first thing that catches my eye. Opening, not great volume yet, but still with the product trading on two venues, it's pretty good what we're seeing here. Seeing good open interest increases, 20% increase. We saw a trade across at least 10 different contracts, so that's always good. The markets are tight, but again, it's going to take time for the full completion of the full move from the other exchange to this exchange before we see the volume. Now, as I got a little bit more interested in the indexes too, I went and looked, and I say, everybody talks about the Dow, right? The Dow's down this, the Dow's down that. So I went and looked, and nobody trades those options. And you would think that from an ease of understanding standpoint, right? People talk about the S&P, but I think if you ask more of the general population, they would talk about the Dow Jones Industrial Average, right? So you would think that number would just generate some interest and potentially see some flow there, but there's really nothing. The option markets are pretty wide, and there's really in the tens in terms of the volume for the week. So it always strikes me as funny as which ones are popular and which ones aren't. But finally, to your point, when you see the Russell sort of down or flat for the year, it tells you that we don't have a broad market rally here, right? We have sort of I would bet, and if we talked about this last week and the week before, I think, and the percentage of the S&P 500 that's actually up is also probably not quite what you would expect it to be. So hopefully with some of these, a little plug to some tools that we're going to be pushing in the next month, where the S&P also has these sector futures, so we're going to be plotting those futures and their returns against the S&P, so we'll be able to see really where the action is in the S&P and where a lot of the upticking is coming from, as opposed to just thinking of it as one number. It's really a combination of 8, 9, or 10 different index groups. So those will be some good topics of conversation as well.
Speaking of topics of conversation, we have no shortage of those here on the show, Mr. Nick. And Crude has been an interesting one. It's one of our star performers here on the show for the better part of the last 6 months or so. Everyone wants to talk Crude. And yet another week, another kind of divergent story out there in Crude. You kind of have two conflicting narratives out there, and how they clashed is what we saw played out in the marketplace this week. We saw Crude posting losses earlier in the week, I think about 3 or so straight sessions, and then following a little bit of a pop yesterday, and then kind of giving up some of that a little bit. It's pretty much ending the week pretty much unched off slightly on the week, right around the 48, almost 49 level, depending on where you're looking out there on the term structure. Again, we're talking WTI here. But yeah, it was kind of a bit of a conflicting week. We saw that production out here, so the EIA, the Energy Information Administration, a rise in our production here of 79,000 barrels a day. But we also saw oil inventories declining. Fell by about 8.9 million barrels. So you have, the one hand, the good story for crude bulls, which is that inventories are declining. You know, the inventory glut has been a big weight on crude so far this year, and yet we also have this kind of conflicting narrative of, but wait a minute, we're producing more at the same time. So it's kind of a will they, won't they dance going on out there. And it seems like at the end of the week, pretty much unched. No one can really make up their mind what the net effect is. I don't think it's going to drive it over 50 anytime soon. It seems like the market tends to agree, keeping it pretty much right in pace, right in line out here. And if you're asking us, as you want to do, you're listening to the show, so you probably are asking us, what was the hot contract, number one with the bullet, hot strike out here in WTI this week? If you had to ask yourself, what would my guess be? And you saw, the names were kind of vacillating shy of the 50 handle, but north of the 45. Where would we be? If you guessed the 45 put out here, then you would be correct. These are actually the OC 45 puts. So getting a little bit of some love out here, some action, which is probably a little bit surprising to some of you out here. And we also saw, but actually, I digress. The 45 put got some love, but it was actually the double call, 55 call, that was slightly outpacing it by about 2,000 contracts to the tune of 24,000 of those double calls. So the bulls piling in earlier this week, particularly Monday and Wednesday, about 10,000 and change coming in both of those days. So the lion's share of the volume coming on both days, and yet a lot opening on that strike as well. So net opening call action out here on the double strike. Could be overriders, but probably a lot of bulls piling in there as well, driving a lot of that action. Number two, 45 puts out there, also an OC with about 22,000, so a couple of thousand less. That one more evenly distributed throughout the week, with about the lion's share coming on Wednesday and Thursday. And actually today, pretty active today, about 5,700 on Wednesday, 6,200 on Thursday, and 5,300. And also net opening pretty strong on this strike as well. So opening action on a little bit wider strangle than we've seen of late. Usually we've been seeing the 45-50 strangle slash risk reversal, call it what you will, depending on how you're looking at those strikes and what your outlook is on crude. But now this week it's about 45 double, 45, 55. So a little bit wider. Then right hot on his heels are also the 50 calls, so getting things a little bit tighter, back into our normal range. About 22,000 of those bad boys going up this week as well, so hot on the heels of the 45 puts. With the lion's share coming on Wednesday, 8,000 and change of those bad boys, and total of about 3,500 net opening on the week. So again, opening paper on a lot of these strikes, which is interesting. It wasn't just back and forth. It was a total net opening out there as well. Then we drop off a little bit to the number four, the 44 puts. So even more pessimistic puts out here. 15,296 to be exact going up this week, including 7,000 and change today and about 5,600 on Wednesday. That's kind of where the lion's share of the action was. Once again, the weeklies not really playing a huge part. The week four out there doing about 600 contracts in the 51 strike call. Outside of that, not a lot really lighting up in the weeklies. You get a little bit farther out, you get to Dece to 2017. You see the double calls again, pretty active, about 8,300 of those bad boys lighting it up here this week. You get out to Jan of next year, and you get about 8,500 as well of the 49 calls. Then you go out a little bit farther to June of 2018. You get the 60 calls with about 2,700, so the number is falling off. And if you want to go really far out, all the way to December of 2020, you see a 300 lot of the 65 calls. So not a lot of size, crazy, upside, bullish paper lighting it up this week, but a lot of puts were active. And some near-term calls, too, in terms of the double 55 calls. Mr. Nick, an interesting week to watch the quick skew as well out here in crude, because it was kind of a will they, won't they all week long. Which of these reports should you really give more credence to, the production or the inventories? Which one weighs more? How do we see that playing out? How do we see that fight playing out in the skew this week?
Yeah, I think if anybody's out there looking at it, we basically had no change for the most part in the skew. So it's really just sort of stuck in that puts slightly bid and calls slightly offered, and that bid and offer gets a little bit more pronounced as you move out on the term structure. I think you mentioned the 55 calls. I think that's fairly significant because they traded quite a bit, and a lot of it was opening. So you do see some bullish trade there. And again, I don't know if those were part of any package or rolling up or anything like that, but it still seems to be that the bias is on the upside with limited downside at this point. I just tweeted an article, and I had seen it earlier in the week, and I was just kind of laughing at it. Citi had put out something that said that the oil prices were probably going to be between 40 and 60 for the next 5 years, with some shocks along the way. I mean, what kind of a prediction is that, right?
That's serious research. 50% move up and then down. Yeah, that's he's really going out on a limb on that one.
Going out on a limb, right? And with some shocks. So really, I mean, heck, we talk about that every week. We're not city. We're just kids from the city, and we're talking about the similar things. I mean, we've seen that. You can go look at the open interest charts and make the same conjecture on your own. So, we see the downside support on the 40 side, and we see the upside resistance on the 60 strike, and some shocks, right? The shocks are going to get up to this 55. But you know what? With some shocks along the way, you know what that says to me, and we've been talking about this for almost as long as we've been doing the show with the crude oil. It hasn't really moved outside of this kind of, this prescient $20 range that Citi has talked about. You're going to see some intraday or multi-day vol pops, but you're seeing no long-term increased volatilities. And as long as you're trending within these ranges, that's what we're going to see. So yeah, there's going to be some shocks. You trade those days. You probably, try to get in front of it if you can from alongside, and then you get out of it quickly, especially if it doesn't proceed. And we talk about, the 2% on top of a 2% moves in one direction or the other. And typically, I think your vol is going to get, you want to have to see bigger increases on the upside to push vol, and you're going to have to see less big but more consistent decreases on the downside to get the vol to get pumped up a little bit. But yeah, not much on the skew side. Vol pretty much, it's down from where it was last week, which is what you expect when you trend in. Our 30-day option was in about 1.25 vol percent. So, it's hard to know here. I think you kind of gotta look at the ranges, and then, if you're thinking about what trades to do, maybe looking at some 1x2s that sit within the first and second, one strike within the first standard deviation and a couple outside, because you really have some room to move if there is a significant push one way or another, but you get to finance, a directional bet with some smaller delta options on the outside of that. So all in all, and I almost felt like I was cheating on crude oil this week, because I was looking at the indexes more, because crude was
much other action to parse,
so much other. Yeah, it wasn't much going on there. So it didn't. It wasn't that all that interesting from a market movement standpoint. You got some interest from a strike standpoint, and you mentioned the 60 strike. So there are still some bulls out there, but I just kind of. My main point was I was just kind of chuckling at that Citi report, because it's just, who did they call? Did the reception give them that answer? Because they could easily have gotten that from some analysts.
Yeah, I was looking at this, and they really went out on a limb. They say it's capped at 60 through 2022. Okay, I'll give them that. But then they put in all these caveats. It could drop to 40. It could go up as high as 70. So they actually have a 30 handle range in there, which is, at that point, the guy's getting probably paid a decent amount of money to make such an extravagant prediction, being so bold. We all should have such cushy gigs, I suppose.
we'll put out the option insider oil report. How about that? And
I like it. It will be somewhere between 0 and 100 over the next year, and then beyond that, it may shock to 120. But I can pretty much wager it won't go below 0. How's that for us taking a stand?
I think that's pretty fair. I think we're going to be. I think we're going to be spot on with that. And if we weren't, I think we'd be happy. So anyway, so that's really it for there.
Hey, I know you're looking at some other products before we get to our winners and losers. Anything else lighting up your personal tape this week, Mr. Nick?
Yeah, no, I don't think anything. I don't think it's lighting it up, but I think something of interest. I mentioned it briefly when I talked about the where the indexes were this week, but I think we got to talk about gold a little bit, because I think people were generally a little bit surprised that gold didn't get a little bit more of a bump up when we saw that break in the S&Ps. And if you go out there and look now, we're basically unch on the week there, and we see that the skew hasn't changed all that much. The calls are bid and the puts are offered. We saw a little bit of an increase there with this with the little bit of a rally that we did see over the end of the day and throughout the day today. But I think we hit 1302 or something like that, maybe 1304. Where did we hit here? Almost 1304. But again, it's to the City article with some shock, right? So we get the shock with the fire and fury from our president, and then you get the shock of this little mini break in the S&Ps. But all these commodities are sort of trending sideways, and I guess that's good and bad. Good from a stability standpoint, bad from a trading standpoint. But until we see, I'm starting to think that these 2 to 3% moves on top of each other really are how you got to watch and expect the market to get any bid in volatility. So until then, it doesn't seem like it's worth owning vol at all.
Yeah, you mentioned gold. I'm looking at it right now, doing a little cursory check. You guys can play along yourselves. CMEgroup.com/TWIFO. See exactly what we're seeing. Now, you may play the settings a little bit so you can get all the weeklies and a bunch of the other months out there. I think it defaults just to the first 4 months or so. But beyond that, you go look and see. Nick was right. It was pretty much unched on the week, which I think surprised a lot of people. We have seen some action in gold of late, and this week, net, not so much. Vol also kind of net, not so much. Kind of a bit of a shrug week out here. In gold. Did see some options paper out here, though. OY up about another almost 5%, 4.5%, which is interesting, given a bit of a meh week. The paper was still lighting it up, including the SEP and OC. 1,300 strikes are where the action was. Almost literally exact same amount, about 9,600 of the 1,300 calls in OC and about 9,100 in SEP, so or maybe a little bit of a time spread going up there, and those are pretty much evenly broken up throughout the week. About 2,500 on Wednesday, 2,000 on Thursday, 2,600 on today. For the SEP, I think OC will probably break down maybe a little bit similar. Let's pull it up really quickly here to see. Those actually all pretty much piled in today, about 6,300. So not a time spread, actually, because it was all pretty much mostly today higher in the OC versus a much more spread flow there in the SEP. Outside of that, not a lot of paper really of note, except for perhaps if you go all the way out, DEES 2018, someone's got a little bit of gold bug fever. We saw almost 2,000 of the 1,600 calls going up this week. So maybe some interest there if you're a hardcore gold bug. They got you covered there. And not to be left out, the NOV also trading a little bit bullish, about 5,000 almost, 4,800 of the 1,400 calls here going up out there as well. Those were, of course, in DEES of this year. So if you're a little bit longer term, a little bit bullish, maybe you got some friends out there piling in with you, or at least paving the way for you. I know there's a bunch of gold bugs out there. Whenever we talk about gold, we hear from you. So there you go. There's your bullish long-term call paper for you there in gold. Anything else on gold, Mr. Nick, before we dive on into what our listeners got on their minds?
Yeah, I think we can make a city-like prediction and say gold will likely be between 1,200 and 1,400 for the foreseeable future. How about that? Based on what we're seeing in the open interest of the strikes, that kind of stuff.
For the next week, we can safely guarantee that gold will be between
1,200 and 1,400. Maybe a little bit longer than that.
There you go. Too. Okay, 2 weeks. 2 weeks. I'll give you 2 weeks. Beyond that,
till the end of August. How about that?
There you go. We'll cash our check. Hashtag City Check. Speaking of hashtags, it's time for you guys to weigh in on your Twitter, your Facebook, however you want to write an email, all of the above. We'd love to hear from you. It's time for our futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to the Futures Options Feedback, your segment. Well, the whole show is really your show, but this is your specific segment where you can write in with your questions, your comments, your pearls of wisdom, all sorts of fun stuff. Hit us up. The guy just told you how to do it. We'd like to start off asking you guys some questions, and this week we asked you guys Which major index has experienced the largest percent change in pretty much front month, 30-day at the money vol so far year to date? So all of 2017. Mr. Nick, I hesitate to even ask you this because you are the keeper of QuickStrike, and we use QuickStrike to actually compile the answer to this study. So you may have the data already at hand, with the exception of Russell. Russell is still a new addition over there on CME and QuickStrike, so we don't have all the data there. So we had to go outside a little bit for Russell, but the rest we all compiled straight from QuickStrike. So I'm hesitant to even ask you because you probably already have looked and cheated. But that said, what would your vote be of these four, S&P, Nasdaq, Dow, or Russell? And also, more importantly, perhaps, what do you think our audience is voting for?
Well, I didn't cheat because I didn't look at it, but I'll just tell you based on what I said before, the Russell, since we don't have it in here, I'm going to just say that's out the window. And I do have access to the other information on there, but I'm going to guess there wasn't much volatility there just based on the fact that we're to unch the Dow, it doesn't trade. So there is no at the money volatility. Probably there is, but there's not much. The NASDAQ is, you know what, I'm going to just be, I think everybody's going to guess the 500. I'll go with the NASDAQ. How about that?
There you go. Interesting guess. Yes, everyone actually on our last show guessed Russell. They were all big fans of Russell vol. In fact, our listeners are going that way right now. 41% saying Russell 2000 vol, 36% coming in on NASDAQ, 14% only so far on the S&P, 9% on the Dow. No love for the Dow. You got a few hours left if you haven't voted yet, listeners. So we don't want to reveal the actual answers yet because we don't want to poison your voting. Probably talk about them on Monday, maybe on Option Block. But something to mull over. We don't get a lot of talking about vol year to date, so I thought it'd be interesting to mull that. You guys can, if you want to look for the answer, you can search on the old QuickStrike and see if you can find it for yourself. It's a pretty interesting one when you see the actual numbers. No spoilers yet. We'll find out. We'll find out together on Monday. Speaking of vol stuff and winners, a lot of people have winners and losers on the mind this week, Nick, for questions. We got this guy. Let's go to this one first. Let's go to Chuck M. He says, kind of along the line, I think this is what inspired, this question inspired our poll this week, a little bit different flavor. He says, I like the TWIFO show, especially your winners and losers. By the way, we were so busy, we forgot to do that this week. Winners and losers this week for the products that had the most action, upside and downside. Palladium, your winner of the week, 3.36% up on the week. This is just net performance for the week. And your loser, Kansas City wheat. 6.23% to the downside. So there you go. I apologize to Chuck M. We got so busy with the indices, we didn't even get to our winners and losers. Again, you guys can check that yourselves on QuickStrike. But he asked, Chuck M says, I like the TWIFO show, especially the winners and losers. My question is, what about winners and losers for the year? You always talk about for the week. Which products are winning and losing for the year? So we did that homework for you there, Mr. Chuck M. Again, courtesy of the gift that doesn't stop giving, the old QuickStrike platform. We typed in that range. We just extended it all the way back to the beginning of the year. I don't know, Mr. Nick, you probably looked at the notes. Did you have any guesses here, or have you already seen the answers?
I see the answers now, so you can go ahead.
All right, I'll give it. I was just giving you a chance. I know you're pretty diligent in the notes. I figured you probably saw it, but I thought I'd give you a chance to play along. But yeah, I just zoomed in and I kind of just lost it. There we go. All right, where is going on with my graph? I just had it. All right. But yeah, so looking at for the year now, this is net for 2017. The number one performing asset, pretty similar to what we just talked about, Palladium. It's up little over 30%. This is net of last night when we ran this, so it may have changed a little bit between last night and this morning. I don't think too much, but 30.12% for Palladium on the green side of the screen. And as for the loser on the year, the Eurodollar is off 36%, almost exactly. So not a good year for Eurodollars. Nick, this kind of is reminiscent of what every time you run any sort of scan here on QuickStrike, could be daily changes or it could be weekly changes in vol, whatever it is. It seems like Eurodollar always leads the pack. It's just a super active product. Does that bring to mind memories of your days out there? And does any of these results surprise you here for the year?
Well, first of all, we probably should disclaim that Eurodollar leading the pack, because one thing that we do with the Eurodollars is we don't look at it from a price movement standpoint. We look at it from a yield movement standpoint. So we take 100 minus the future and get the yield, and then we look at how much the yield is. So a 36% on a 1.5% yield is not quite as robust from a future standpoint as it might seem. So we have a note to make a note that, we have a little asterisk there that says this is in terms of yield. So the reality, I would say, I'm going to do I'm going to pretend I'm an ice skating judge, and I'm going to throw out the high. I'm not going to throw out the high, but I'm going to throw out the low in this case, and go and say silver is probably the winner of that, with Eurodollars getting a mention based on the asterisk of measurement in terms of yield. So there's my answer.
Always playing Eurodollar. So much going on out there. Is always playing with the yield. Actually, according to Quick Strike, Mr. Nick, number 2 is Nat Gas.
I went 6 months. Oh, I did.
With about 10.8% off to the downside. So there you go. Having problems navigating your own platforms.
I see. I'm looking at. I have my date range. Do you have 1 to 2? What do you have in there?
This is January 3rd till last night. So there was no trading on the 1st, obviously. So the 3rd till last night, it is Nat Gas off about 10.8%. Crude WTI off about 9.9%, and then live cattle and good old RBOB gasoline, about tied at 7.5%. Then it kind of goes up from there. Heating oil, soybeans, etc., and so on and so forth. I have net on the year for iron ore. I'm looking at all these. Silver is actually net up on the year, about 3.5%. If you look at,
I went back a full year, not to the beginning.
See, there you go. See, not a year from now, year to date, sir. So there you go.
Year to date.
That's why it's a tricky question. Chuck M throwing a wrench in the works. I like it. Good question there, Chuck M. I like the winners and losers stuff too. Maybe we'll rotate more of that into the show. That was kind of a fun one, and actually you did. You inspired our question here, our flash poll for today about year to date volatility. So good question all around there, Mr. Chuck M. Speaking of this, everyone's got this on the brain this week, Mr. Nick. I don't know what it is. Tomzek wants to know, how do I do this? How do I get this? How do I get this winner and loser scan on the CMEgroup.com/TWIFO page? Nick, I think what he's talking about here is exactly obviously what we're talking about here, which are these scans. I don't know if you can do the scanning. Maybe you can obviously clarify for us, Nick, if you can do the scanning parts on the /TWIFO link. That's, of course, where you go into effectively, if you have it on the full Quick Strike, you can see the Markets Reports tab. Then you go into a section called Market Scans, and you could do it that way. I don't know. Mr. Nick, do they have access to that on the /TWIFO link?
It's not available on the TWIFO link, but if you go to cmegroup.com/quickstrike, QUIKSTRIKE, and you register for the Quick Strike Essentials tool, which is free, inside that application, you're going to see a benchmark prices section, and there's a performance tab that's available. In that tab, you'll be able to see what the winners and losers are, and that's where I was looking, because I was trying to get a reference for what you guys can see. In there, we give you a date range of 1 day, 1 year. 1 day, 1 week, 1 month, 3 months, 6 months, and 1 year. So I'll add a year to date item in there, so we can actually follow along with Mark's example, and then you should be good to go. But register for Essentials, and you'll be able to see both a market dashboard as well as a market matrix, and then the performance. If you're a subscriber, then you get to see the more advanced stuff where you can do some scans and stuff like that, which lets you look at volatility and some open interest stuff and the like. So, but yes, the chart that Mark is showing is free in Quick Strike Essentials. It's not part of the integrated, embedded into the CME Group website just yet. It may be, but for now you can get it in the Essentials, and you can either create a login account for yourself there, or you can use your CME Group CME website login and to enter Essentials as well. That's a simple one click, and then put your credentials in, and you'll be logged in across all of the CME Group tools.
There you go. That /TWIFO page is what they kind of created. Let's make it easier for you guys to follow along with the show as we do it, and check out the reports for yourself if you want the kind of more of the in-depth kind of functionality we're talking about. You guys, if you listen to this, you should already have registered for Essentials. It's free, for God's sakes. If not, go do that forthwith, and you too can play around with all these charts that are even confusing Mr. Nick. He's got so much functionality in his scanning tools, it's even confusing him, which is a good sign that you can do a lot of robust scanning out there. You too can see what's going on in KC Wheat for 2017, if you are so inclined. All right, moving on. We got a couple. So we got time for a couple more here. We got comment here from HPpetition. I think he's talking about something we were talking about on the show actually last week, or maybe even the week. Actually, it was last week. I think index stuff. I think, or maybe 2 weeks ago, we had a report coming out of a trading firm called Double Line. They're talking about how buying out of the money S&P puts was like free money to them. This was in the teeth of the sell-off, so they looked like geniuses. And we were kind of joking about that. Is that really free money? He wrote in to say no, but selling out of the money S&P puts is. I can see where you're coming from. There's a lot of data these days on the quote unquote harvesting the risk premium trade, which is effectively what you're talking about. All of it pretty much in selling out of the money puts. You go to any major conference of the past year, risk management, the OIC, I don't care what it is. Everyone's got harvesting risk premium on the brain. So that's kind of what you're talking about there. But that said, that can work until it doesn't this week. A little bit of a dangerous time to be blasting out a lot of out-of-the-money puts. Depends on how you do it. Maybe you want to look at put spreads. If you're a little bit more risk mitigated, of course, you can also use the short puts as the way to leg into perhaps a wheel trade. So if you get put the underlying, you turn around, sell a covered call against it. Now you're getting hopefully paid to get in, hopefully paid to get out, and it works pretty well. So a lot of ways you can play with a short put. You don't have to just blast it out. But that said, if I had to go one way, I'm definitely selling those puts rather than buying them, because we know just aggregate data over time. I think a lot of the data I've seen somewhere, depending on how far out you go, obviously, and how far out of the money you go, somewhere around 2.5% out of the money put, and S&P is going to cost you at least 8.5% or so annualized a year for that kind of protection. So that's a lot. So you got to overcome that in some ways. And so, straight up buying out of the money puts, not a huge fan. Mr. Nick, what say you here to Mr. HPpetition? He wants to sell some puts.
We talked about it last week a little bit too. You see people out there buying them. They're probably buying them for a different reason. They're probably buying them as a cover. And you see people selling them, and they're selling them for the reason that HPpetition is doing it, because they think that it's some free money out there. Like we always say, what's our saying? It's a good strategy until it's not anymore, right? And but I would probably be more inclined to be a seller, or maybe a 1x2 seller, buying one and selling two, and trying to get like part of a butterfly trade out there, and go from that standpoint. Naked puts on the indexes are always just a little bit frightening. So, but I'm sure plenty of people do it, and plenty of people make money. I know plenty of people who never traded before they retired trade naked puts out of their IRA, and have smiles on their faces all the time. And like I said, until they don't. So
you and I have both been around long enough to see people. We first walked on the floor. Your CME for you, SIBO for me. You saw all those little, they called them at the time, teeny put sellers, and there were a lot of them. And then one by one, they would go away and they come back with a different jacket. And so this strategy has been around for a long time. And you're right, it works until it doesn't. So long as you have a plan in place for what happens when it doesn't, then you can be good with this strategy. Or if you're using the short put as a way to get paid to get into the underlying, that's also okay, as long as you identify a level where you're comfortable buying that underlying. Then you're effectively doing the same thing as if you're working a limit buy order in the stock. You're just getting paid to do it. So in that case, I'm on board with you there as well. Again, as long as you understand the downsides and what can happen there and you're planning for it, not a bad way to go. All right, we got time for one more, Mr. Nick. We'll end with this one. This comes from Nils. He or perhaps she wants to know, hey, I'm confused about the option contract specs in WTI. If I sell one put in WTI, how many barrels of oil am I risking getting long? So this sounds like a multiplier question to me here, Mr. Nick. So I encourage you, if you are trading WTI, head on over to the contract specs page on CME. It actually is a little bit buried there. You may have to dig around a little bit. It's not quite as obvious as saying, here is the multiplier. Here's exactly how much you get. It kind of just tells you you getting long or short the underlying, which isn't really that informative. You got to dig around a little bit if you're looking for it, which is probably why you wrote to us. You probably used to, on the equity and index option side, usually having a multiplier somewhere around 100. So here's the price. If it's $1 times 100, now the cost of one contract is $100. In the WTI, aka the NYMEX crude there, the futures are going to be 1,000 barrels, so aka 42,000 gallons. It's a lot of gallons of crude. So you multiply a little bit different. It sounds about around 1,000. So keep that in mind when you're out there trading for it. If you sell a put for about $2, you're going to have that $2 multiplier, or excuse me, 1,000 multiplier or so in there. Mr. Nick, is that your take as well? 1,000 multiplier on WTI, and any other thoughts on some of the confusing specs out here in because it can get confusing, particularly if you're coming from, let's say trading Apple options all the time and you're used to your 100 shares per contract. Now you get into something like WTI and that changes a little bit.
Yeah, I mean, I just tweeted a link to the to the contract specs. And two things. So first off, you when you're in crude oil, first off, the simple thing, not in the not too distant future, there's going to be a very nice product browser out on the CME website, and when you search for something, the name will immediately be a link to the contract specs. So it should be pretty straightforward and simple for you to get the information that you need. So with that tool, you'll be able to see, all the expirations that it has, and you get a little chart and stuff like that. So it should be out there fairly soon. Yeah, it is 1,000 barrels, but so if you're thinking of premium, if you see it in ticks and stuff like that, you want to multiply that premium by $1,000. So if something's trading, if you see something trade like 1.28, it's going to be 1.28 times 1,000, right? So if you are a user of QuickStrike and you're in Essentials, you should be able to go to a pricing sheet, see the premium, and not only on crude, but on all of the products. If you hover over the premium in ticks, you will then see a little text box that pops up that shows you what that value is in dollars. So that is something that you can go out there and use in order to get a little bit more acclimated to the prices.
Yeah, it takes some acclimation, that's for sure. It isn't exactly. I was surprised actually after I got this question. I wanted to go see what they could find there, and it is a little bit buried. So hopefully, I'm glad to hear you guys are stepping up to the plate and helping make things a little bit easier to find over there on the old CME site. There it is. That music, listeners, means unfortunately, the hour flew by. How did it go by so quickly, Mr. Nick? That means a sign of a good show, certainly a fun show for us here to record it. Hopefully a fun show for you guys listening live and out there after the fact as well. But before we go, Mr. Nick, you guys are always cooking up cool stuff over there in QuickStrike land, including what you just talked about, helping the contract specs be a little bit easier to find. What else is on your docket, on your whiteboard over there in QuickStrike, sir?
Let's see. So the product browser is going to be out there fairly soon. We also have a block trade browser for those who are interested. That's going to come out there. It should be pretty good as well. Very functional, and a few tricks inside the product browser and the block browser. What else is coming out there? Well, due to popular demand, we did inside of all of the levels of QuickStrike, we added a link up on top called Quick Coin. So you can click on that link and get the Bitcoin reference rate that the CME publishes, as well as the Bitcoin real-time index. So we are trying to, get a little bit more acclimated with that product, and hopefully we'll see some more stuff out there in the near future.
Hashtag Bitcoin, sir. Can't get enough. You're at over 4,000. It is now the new flight to quality. Who thought we'd be saying that? Bitcoin, the flight to quality. Forget bonds, forget gold, the flight to quality. Now Bitcoin. There you go, listeners. Check it out. You can see, kind of follow along with the show, what we were mentioning before, cmegroup.com/TWIFO, or you head on over to the Essentials page there, log in there, and set up a login there, I should say, and then you too can see for yourself exactly what we're talking about here and some of these cool scans that we like to do too, which aren't on the actual show page there. So check it out. Kick the tires and light the fires, as they say. Well, like I said, that's going to do it for us here on TWIFO for this week. Thanks for joining us. We love to see you live. We love to hear you after the fact too. That's where most of you get it. We like to put the live out there as a fun little bonus for you hardcores out there who need to get it right away. But we love seeing you there. And on behalf of Mr. Nick and our friends at CME Group, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, all the fun stuff that you do, including hitting us up with such great questions. A lot of good ones this week. Keep them coming. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered. With market data reports ranging from open interest to the term structure of volatility, QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.